been fantastic to be here in Crypto Valley. What an extraordinary event, and I know it's nearly culminated here. But although I know there's been some extraordinary talks given, I'm hopeful this is the best panel of the day. We shall see. So, joining me today to talk about central bank digital currencies are some of the leading experts in the world, and they're all assembled right here on this stage. So Thomas Moser from the Swiss National Bank is here to chat with us. Some of you have seen him speak before, but we're going to be hearing a lot of new information. Actually, Thomas, why don't you go and give yourself an introduction?
Okay, thank you very much, David. So, Thomas Moser, I'm an alternate member of the governing board of the Swiss National Bank, which is the central bank of Switzerland and the issuer of the Swiss franc. And I think I'll leave it at that.
I like that. That's a useful thing, the Swiss franc. And you also, of course, have been, in addition to your formal title, you've been deeply involved with some of the more innovative uses of technology at the Swiss National Bank. Isn't that correct?
No, that's right. I mean, I got involved for private interests. So in 2013, I guess I got involved. And that was before most central bankers really paid attention to cryptocurrencies or Bitcoin or anything like that. Actually, then events just, especially, I guess, DM or Libra was a wake-up call, and since then, now central banks are really interested in the topic. And I have actually been here on a panel when it was announced, and I had been asked, what do you think about Libra? And back then I said, I think it's interesting. Competition is good. It made headlines, and the communication department since then tells me, don't make headlines when you go to this event. So not trying to make any headlines today.
We will do our very best to make sure you make no headlines here today. And yeah, DM Talk, he's coming out with punches in question 1. Excellent. Okay, Matthew, would you like to introduce yourself?
Thanks very much, David. Hi, everyone. Matthew Alexander. I'm working for SEBA Bank. We're based here in the Crypto Valley as well, in Zug. And I'm looking after digital corporate finance, asset tokenization, and that involves also working in these experiments.
And so what is SEBA Bank? I think it's going to be helpful for some of the
SEBA Bank is it's a digital assets banking platform. We're regulated by the FINMA, so one of the few that provide institutional trading, investment, and banking solutions to crypto and digital assets.
Excellent. And Ekaterina, tell us about yourself.
Yeah. Hello, everyone. Yes, I'm Ekaterina Anthony, representing Guys Bulle Weber & Partner today. Starting December, I will have my company, Finvestech, where I will focus on startup and compliance. So this is what I do, regulatory compliance for crypto companies and helping them to feel comfortable in the regulatory environment of Switzerland. And also, I'm board member of Crypto Valley Association.
Excellent. Alexander.
So I'm Alex Kesh. I work for Citi Ventures. I'm running their blockchain and digital asset practice. It's a new team established in Zurich and Zug. Currently hiring a blockchain architect if someone is interested. And the job of this team is to engage with the ecosystem, make sure that we understand what's happening, and also what will be the role of banks like Citibank in the future in a world that is more and more decentralized.
Excellent. And for those of you who don't know me, I'm David Wachsman, and I'm the founder and CEO of a company also called Wachsman, which is the largest communications strategy firm in blockchain. We have about 110 employees around the world. So we've, more importantly, been supporting the CVA even before it existed. And I've been really proud to be here through so much. And today, again, we're seeing the CVA is the best is yet to come. So let's get right into it. First, I'm going to ask a basic question. And I know it's one that's been answered before. But again, for the purpose of this discussion, we need to go and get some context. What is a central bank digital currency? We don't need a complicated answer, but Thomas, can you give us a very simple answer of what it is?
I think the most important thing is it's a liability of the central bank. I would say that's the main definition, and obviously it must be in some digital form. But I would say that's it. A
liability. Okay, so. Similar to, for instance, a liability like a banknote would be a liability. Is that correct?
Exactly. Yeah.
Okay. So that's a pretty simple definition, and it's one that would be issued by the central bank.
By the central bank, yes. Yeah.
Okay.
Yeah. So that's like what the IMF calls a synthetic Cbdc, which is actually issued by a private entity, but it has as a collateral or underlying asset a central bank account. I would not call that a Cbdc because that's not a liability of the central bank. It's a liability of the issuing entity.
Right, which might be a commercial bank, for instance.
Exactly.
Okay.
Yeah.
And we'll certainly be speaking about how commercial banks are making use potentially of CBDCs. But let's, I guess, dig in just a little bit further, which is to say, does a CBDC necessarily need to live or operate on a blockchain?
Actually, that's a topic I'm very interested in because I have, together with David Wachsman and Christian Gotthoff, made a proposal for a CBDC not on a blockchain. So usually what I'm saying is that a blockchain most likely needs a CBDC, but a CBDC does not necessarily need a blockchain.
Oh, man. Okay, well, there's going to be a lot of people who are surprised at that answer, as it turns out.
Yes, I can imagine. I mean, the issue is, of course, on a blockchain, if you like SDX, or if you try to sell stuff on a blockchain, you need some kind of money. You need some type of money to pay on a blockchain. And there you can use a stable coin or you can use a CBDC. But at the same time, when we look at the projects that several central banks have with CBDCs, retail CBDCs, it turns out that it's quite a challenge to have to run a retail CBDC with all the efficiency that you need on a blockchain. I mean, we talk about, just thinking about Switzerland, which is a small country, to have 8 million nodes on a blockchain and do like 30,000, 40,000 transactions maybe a second. That's a huge challenge. That was one of the reasons why we said, no, let's do it without a blockchain. If you look at some of the projects now, like the Bank of the Swedish Central Bank, what they basically do is they just use the blockchain or the DLT just for the settlement among the financial institutions.
So they group transactions almost at one, and then they every now and then settle to more or less have a proof point that sits
kind of like the Lightning Network.
Okay.
Yeah.
Excellent. Well, we're already starting to get into some of the more technical stuff, but let's get again more context. This is a long panel, and we're going to dive deep. But where are we right now? So, Alex, you've been a student of this. You're forced to be, in part because Citi is everywhere. But what is happening around the world? Can you give us a bit of a status update in CBDC developments? Highlights, at least. Yeah.
I would start by saying that there's a lot happening, and I'm not going to be able to mention all that is happening. But I think, first, at international level, you have a lot of international organizations or entities that are working on this topic, like the BIS, for example, which has quite a few innovation hubs, one in Hong Kong, one in Singapore, and others, who have dedicated team working on that. So there are, for example, two projects worth mentioning. One is called Dunbar, who will start very soon, who associates 4 central banks, Australia, Malaysia, Singapore, and South Africa, to experiment 4 currencies being on the same blockchain for CBDC cross-border movements and domestic movements. There is also the mBridge, which is a similar concept with 4 other central banks, China, Hong Kong, UAE, and Thailand. And just to give you an idea of how important it has become to central banks, the Chinese central bank has put 400 staff to work on that experimentation and development. So it just demonstrates that, for sure, CBDC is there to stay. It's not really a question of if, it's more when. And then you have each, of course, national banks who are doing their own experimentation. Helvetia, we discussed that already this morning, but the Banque de France has announced some conclusions around bonds issuance against CBDCs, settlement with Euroclear and other partners. You also have a first CBDC, retail CBDC, that will go live in Nigeria by the end of the year, called eNaira. They're using Hyperledger Fabric blockchain to do that. There are others that are also pushing competition, or at least creating challenges to get the best ideas in the CBDC world. That's the MAS in Singapore, who has launched a global CBDC challenge. And I'm proud to say that Citi has been selected as one of the 15 finalists on that for the regulated liability network concept that we've been put into place. And I'd like to share a bit more about that later. So as you can see, quite a lot of things. Also, I will finish by some interesting publications. By the BIS, for example, who've published with 7 central banks an annual report on the progress around CBDC, and also the 7 central banks in question also having published principles for CBDC issuance. It's all available publicly, and I really invite you all to have a look at that, because it's quite interesting to see the evolution of thinking of central banks around this.
So we've seen it's happening all over the world. We have it in Nigeria, we have it in Southeast Asia. What I think is really interesting there is the consortia of central banks getting together and realizing that there needs to be some sort of interoperability.
Absolutely.
Or let's call it really clear and clean communication and transport of value between different countries. Because I imagine this is quite challenging when it comes to, from a compliance perspective, dealing with cross-border payments. I mean, as it is a liability on a central bank's balance sheet, I would have to ask and wonder, is that something that is a concern once it's crossed a border and perhaps even being used, perhaps even usurping the national currency of another country? Tell us, I mean, look, you work in compliance all the time. Do you see compliance issues if a CBDC were to become popularized?
I would say so, because each country has a different regulation. We also have different definitions. And if we look at the central bank money or even private projects, yes, and how they will cooperate, interact between each other, we see a lot of issues here, and also definitions as well. You know, in different countries, it's treated differently. Functionality, and like Thomas said, we had a really wake-up call with Libra, where FINMA issued the guidance here in Switzerland.
Yeah.
Really good, when we really understand what for private projects stablecoin, for example, mean. And we have we are a bit advanced, because just yesterday FATF issued new update on the Financial Action Task Force VASP guidance, where they stated things which we already actually have in Switzerland. And I guess it was FINMA who advised them to do so. And I would say, from me, as I'm advising businesses, the question is how we can use it for businesses, from, you know, what will be next step and why we need it and why we need blockchain. You know, being from, I'm originally from Russia, maybe, and from Soviet Union, I think it will be great to have something like digital currency will cover all this former Soviet Union territory and give people possibility to trade between these countries, because they really have issues with you know, currencies, cross-border transactions, for example. Maybe it will be some regional...
Meanwhile, many of those countries are their largest trading partners with each other.
Exactly, because from historical point of view, and maybe we can bring this value. So for me, it's always a question to answer, what we bring with these new developments. Yes, it's maybe more transparency, more security. If we use blockchain, we can trace it better, but also how we can benefit for commercial reasons.
Well, let's talk about that. That's actually a very good point. So what are banks doing about this? That is to say, are banks even necessary in a world with central bank digital currencies, or in effect, have we created technology that makes them redundant? What do you think?
You're looking at
gentlemen from the bank.
Which of us? Yeah, look, I think just by way of context, we've been at Ceba involved in 2 CBD experiments, so one with the Bank de France, which we completed over the summer. This was a wholesale CBDC experiment, which we did in conjunction with BIL in Luxembourg. A terrifically interesting experience, and I think speaking to a lot of the questions that people tend to raise is, when is this coming? What are people worried about in the wholesale world, in the institutional banking world, as well as retail? What kind of struck me particularly in that experiment was the sheer level, I think, of conviction that this is coming. And I think that is one question we always get, is when will we start operating with digital money in a central banking context? And I think, as you said, Alex, before, it's when we spoke to the Banque de France, there was an auditorium as big as this filled with you know, very serious intellectual capital. And for them, it was not about if, and it was not about why, it was about when and how. And that's absolutely clear. And it's, to us, it was made very clear as well, working across different experiments, that the move to tokenization, tokenized securities, is for them a fait accompli. So this is coming.
And do you think that it's good? I'm saying for the banks. So like, let's say SEBA Bank is a digital-first, you know, bank and financial services platform. And so, do central bank digital currencies? Is that going to be a new commercial opportunity for banks in Switzerland and beyond?
I think absolutely. I think, I mean, if you think about, you know, the trade being the settlement. So in terms of institutional banking, and we worked with for the Eurosystem, it's all about the settlement and being more efficient and more secure, but also with the transparency held back, such that the banks can work in the context of a, let's say, semi-anonymous state. So when it comes to security and using a public protocol, if you tell the central bank you want to issue 600 billion in digital euro on the public blockchain, they have a few questions about that. But in terms of the efficiency gains, the speed, taking out disintermediation brings a lot of benefits, I think. Certainly moving and facilitating to use that coin as a settlement within a securitized, tokenized institutional trading platform, there's a huge cost block that can come out. It raises, of course, a lot of questions, particularly around how the central banks like, and I'd be interested to see how you think about this, but one thing we found with the Banque de France, they really wanted to make sure that, and what we did was to settle a security into T2S, which is the European settlement, which is running 600 billion of volume every day. How we settle that into T2S on the public blockchain. And so for them, an important aspect, of course, when they're interfacing with other institutional banks and other central banks within the Eurosystem, they don't want everybody to know where they're directing their flow.
Well, certainly, and so privacy and the way these things are created is going to be very important, and
yes.
we should definitely talk about that. But before we talk about kind of the different models or archetypes or iterations that one could have of a CBDC, because of course there's been all this experimentation. I'm told that there's 110 central banks around the world, which is approximately half of all central banks, are already at least experimenting, and some of them getting to pilot, and we learned today even heading to production, CBDC research. But what are the actual? Let's break it down. You mentioned some of them, in what you just mentioned in your answer there. But what are some of the real advantages? You said settlement. So you think there's going to be more rapid settlement when it comes to trading? Is that correct?
Yes. I mean, the trade is the settlement, and I think their interoperability, depending on whether you're using, a permissioned or a private protocol, will have an impact. But I think one of the major questions is how do you converge existing infrastructure with a public blockchain? There is a lag there. But certainly you can close the gap in speed. And I think particularly one aspect has been through 2008 financial crisis, lender of last resort, rapid disbursement of central bank money. This can be significantly improved.
Certainly that's I'm sure, something that the Swiss National Bank and others have thought of, which is, when is this going to be particularly useful? I mean, would you say, have you even had to make an argument, or is there an argument internally? Perhaps between, maybe not detractors, but people who are consciously, they're public servants, cynics. What's the argument that's made for why CBDCs, Thomas?
Yeah. So I think that really differs from country to country. Like here in Switzerland, we came to the conclusion that a retail CBDC is not really bringing that many advantages at this stage, at least, but a wholesale CBDC, especially if you have this new financial market infrastructure emerging on blockchain, that's when you need some way to pay on that blockchain. And you can do it with stable coins. A CBDC has clearly more safety to it. And so in our case, we said, wholesale CBDC makes sense. We made these experiments too. We also made with the Banque de France actually an experiment. We will issue the report probably towards the end of this month. So in the retail space, we are not active at that stage. But for other countries, like Sweden, where you have the cash basically disappearing, or other countries where you have a payment infrastructure that is not that up to date, not that modern, it can make sense to switch immediately to a blockchain or DLT technology.
Is it that the advantages weren't sufficient for all the cost, the change management that would need to occur on the retail level? Is that why you made the decision to focus on wholesale?
So, there are clearly efficiency gains to have, but that again depends on the legacy infrastructure that you have. So I think it's really difficult to make an argument for all countries. I think it really depends on the circumstances in the country.
So there makes sense then to have, and I think you just made a case for why there needs to be multiple different CBDCs out there. And of course, Citi, you guys are all over the world, and you're seeing this. Let's talk about Nigeria. You mentioned that's a retail-focused CBDC. So beyond talking about that specific use case, can you maybe tell the audience here, what are some of the advantages that might exist in, let's say, a developing country or a rapidly growing economy that's using a retail CBDC? Can we talk a little bit about that?
Sure. So there's also another country in Southeast Asia where I used to live that has also a live CBDC implementation, which is Cambodia. And there, similar to Nigeria, the objective Well, part of the objective is financial inclusion in the sense of being able to reach the unbanked, because a lot of people in those countries are still unbanked due to many reasons. Either they don't have, well, they are too small to be bankable for banks who wants to do profits and other reasons. And I guess it's being able to reach those type of audience that CBDCs and the retail CBDC in this case can be very useful. Dispersion of social support as well as social help, for example, can be another reason. For
so
example,
like welfare or
welfare,
food payments.
Yes. For example, in the US, there was that debate about retail CBDC at the time of the COVID relief package that they wanted to distribute. And at the end, they ended up, of course, sending a check, which sometimes ended in the wrong mailbox. So
indeed, it had Donald Trump's signature, or at least on the first
Donald
one.
Trump on each of the signature. So there's an obvious efficiency gain that you can get by being able to push CBDC down to wallets that are managed by customers, by individuals or by banks. But one I would add is programmability as well, so programmable money. So you could very well imagine in the future that, yes, I'm a government, I'm giving help to individuals because there's a crisis, but that money is only spendable for food and for essential goods.
Okay, so let's pause here for a moment.
Yeah.
This is a big topic.
Yeah.
What did he just say there? He said that money that could be perhaps issued or dispersed by a central bank may only be used or can only be used.
Technically, you could program it to only be used in certain shops or to be received by certain wallets, for example, wallets of grocery stores and not wallets of alcohol stores, for example.
Okay, so let's talk about the upside here first, because I think it's important for us to be speaking about the downside too, but the upside there. Will this reduce fraud?
Well, if it's controlled via blockchain, I guess so, because you will control everything, you know. And I would say blockchain in this regards will be the best you can do for controlling for the governments. It's the best solution you can have for the financial regulator. And if we already know that if you do compliance, if you onboard the client with traditional business, you will always have a lot of questions and you can't trace everything, and you always have a lot of paperwork. With blockchain money, you can easily just look at the blockchain and you understand everything. You know, you don't need a lot of efforts. It's much more transparent, but it's also have to be transparent from the governments as well. You know, they have also to be in transparent level here. So it's also about the economies, about issuing new money and how manage economies. It can be really next step to absolutely new area.
Are there other upsides to that type of, let's call it really transparent, the nature of a central bank digital currency potentially on the retail level? Are there other real advantages to that? How could this transform society?
That's a big question. Look, I think actually one area I find a large benefit is in AML KYC tracing. I spent a long time working in private banks, and I think the natural reaction at the moment from a private bank or in general is cliche, crypto is used for corrupt purposes, can't be traced, etc., etc. Now, if you're looking at the history of how a piece of wealth is used, and you monitor, so compliance monitoring within banks, both wholesale and particularly in the private banks, you need to monitor and ensure compliance with every trade. And when you onboard a new client, that can be an enormous prospect. And we saw the DOJ coming at the Swiss banks very aggressively in past years. So actually using the public blockchain, or using a blockchain solution, and I'll take a little bit of license here, there's only really one trade you ever have to verify is done legitimately, and it's the first one. And once you work out the first time that was ever converted from a fiat into a digital currency, and you're sure that has been done in a compliant way, then you can trace it easily thereafter. So I find that to be
so remarkable traceability. I mean, this could allow for to stop corruption. This could perhaps, may I pose a possibility, allow us to lower tax rates because you actually could collect all the taxes as opposed to only some of them. Is this a possibility?
I think absolutely. I mean, in countries who have a very, very high respect for the law, and you have to assume all are going to ultimately be the same, then yes, that makes a lot of sense. So, the tax base becomes much bigger, and therefore, ultimately, you could make an argument, you reduce the tax burden itself.
But let's talk about the downside too. I think it's worth noting, and Thomas, I'm sure, for instance, that you have thought a lot about this, and this has weighed on your mind and your colleagues many times. Is there a problem, and perhaps one of this is maybe why you also didn't pursue this yet on retail, is there an issue in privacy if every single transaction is being monitored by government? And of course, Switzerland has a unique government setup, but is this something that you've thought about before, and what were some of the issues, I guess, and risks about privacy specifically that came to mind?
Yeah, no, absolutely. And the proposal I was talking about, which is actually issued as a working paper at the Swiss National Bank website, is exactly about privacy. So that was one of the reasons too why we made that proposal together with David Wachsman, who is I guess one of the pioneers of digital privacy. So I think this
he might be the pioneer of digital privacy. Yeah. In fact, yes.
Exactly. So I mean, this is really a big issue. I mean, you have on the one hand, you have some people who say, I rather have my data with the central bank than I have it with some private commercial enterprise. I mean, that might be one way to go. But at the other hand, if you have basically a possibility for a government to really have centralized all this data, I think it's scary. I wouldn't want to have the data. I wouldn't want the central bank to have the data. But the trick really is to get this balance right between compliance and privacy, because if you have it anonymous, totally anonymous doesn't work, because you have to have this compliance with AML, KYC, and so on. At the same time, total transparency, I think, is not really what we want. So it's really a challenge, and I think that's very exciting. Research right now is going on, is to get this balance right, to provide some adequate privacy, but at the same time make sure that it's compliant. And I think I think the window of opportunity that we have here to get it right is relatively short. So I think it's really worth to
Why is it short?
Because I think otherwise we will just have the regulation come down to an extent that you will have basically no privacy. I think the
That's
regulators...
That's dystopian, right?
With CBDC, the regulators are still trying to figure out how to regulate CBDC, because CBDCs, there are not many around yet. But I think once you have then a regulation in place, it's going to be much more difficult to change it. So if we can use some of the interesting technologies that come out of cryptography, we might get it right. It's very difficult, but I think that's a very exciting field right now.
So in other countries around the world, of course, we're seeing this. It's worth noting that in China right now, there's, of course, a well-advanced central bank digital currency project. And at least the rumor has it, reportedly, the McDonald's in China are being forced to accept the digital yuan in advance of the upcoming Winter Olympics. And of course, I guess the upside might be, wouldn't it be great if you could go and use digital money, natively digital money, to make a payment, as opposed to utilizing a credit card system or WePay or whatever it might be? Of course, the downside might be, what if a central government might decide to prevent you from being able to buy food? Is that a real risk, or am I being a conspiracy theorist?
I think it's conspiracy theory. I mean, as soon as the money is a legal tender in a country, any shop needs to be able to accept it, like cash money today. You can't refuse cash money from someone who wants to buy a Coke, for example. So if the Chinese yuan CBDC is legal tender in China, which it is obviously, there is no reason why a shop should say, I don't want to accept it, in my view. And that would apply in any country. It's not because it's China. I think it's a normal way of having a currency being used in a market.
So there's not the risks, you think, of the spigot being shut off, of perhaps something else triggering an event which shuts off your ability to spend money. Is that true?
I mean, I kind of see some difficulties insofar as central bank issued e-money working alongside private pools. And here, of course, when it speaks a little bit more to monetary and fiscal policy, the sovereignty, and how you influence purchasing power and inflation, What happens when, let's say, the adoption or the prevalence of the use of a private money coin as opposed to the central bank sort of disconnects? And that's a big issue, I think.
Well, let's talk about that then. Sorry, let's change topics because that's a really good one, which is, can stable coins that are not CBDCs coexist with a central bank digital currency? Do they need to?
I think they will.
They will.
As you rightly said this morning, and it's already happening today with commercial bank money and central bank money. They coexist, and now there is even e-money, which is a different type of money because the issuer is different and the liability is different. Well, the entity having the liability is different. So I think they will coexist. There is no doubt about that. Stablecoins will have to be regulated more than what it is today, because today it's not regulated or very little, and that's happening as well. And FATF is looking at it, but the US are going to come up this week or next week with a report on how they plan to regulate stablecoins.
The OCC says that and the SEC apparently is going to have purview over that.
Absolutely.
But there's been basically the agencies are competing for jurisdiction.
Yeah, so they will coexist, but the risks are similar. To go back on the programmability of money, I think the risks are similar in privately issued stablecoins and central bank issued CBDCs over the excess of power that it gives the issuer of those coins. So to go back to your Chinese example, yes, if China can for sure decide that this person is a bad person, I'm withdrawing all its CBDC from its wallet overnight. I'm sure that they can do that technically. But stablecoins issuers can do that as well. I don't know if you know, but if you look at the code of USDC, you will find interesting lines of codes that enables the issuer of USDC to cancel, to delete coins, or to freeze coins. Of course, they will tell you what the objective is to, if there is a hack, we can freeze the usage of the USDC in those wallets. But that gives them also technically the ability to decide to remove all the supply from the market overnight as well. So those risks exist. They need to be looked at by regulators, because regulators are there to protect consumers and the stability of a financial market, and they need to be dealt with, for sure.
Well, so that might be a matter of controls, right? And I would say that corporate governance, or governance in general, is a real concern. Yep. So I would say with the central bank digital currency, it seems clear that the central bank itself would be governing the supply, for instance, right? And the manner with which the digital currency might be used. With the stablecoin, yes, you're right, it is less clear, and perhaps that needs to be determined. Right now, a lot of the stablecoins seem to be either self-directed, otherwise there's an effective SRO that's de facto popped up to help figure these types of things out. But back to stablecoins coexisting in this world with CBDCs, and I know this is hard to ask about, but do you think that over time CBDCs will overtake popularity of stablecoins? Because right now, stablecoins are huge. They are the other side of the trade very often. They're very often the most liquid other side of the trade for Bitcoin and Ether, as an example. Certainly at SEBA, I'm sure you've seen lots of that. Do you think that at some point CBDCs will overtake in terms of the amount of trading volume?
I mean, I think eventually there's a strong chance they will. Because if you look at the coexistence, let's say, of the two once they come into the mainstream, I mean, US dollar tether, obviously, this has developed incredibly in terms of volume and usage. I haven't checked recently, but it must be more than 80 billion. A year ago, it was like 8. Incredible usage, but as far as we see, with institutional clients, it's used mostly by retail. And there, it's all about, as you said before, it's a claim against the central bank, a liability against the central bank for your own fiat money or future. You have certainty and you have trust, and that's what gives you certainty of your claim. With, let's say, other stable coins, which are independent, there is a large question mark over whether or not sooner or later that'll get regulated to the extent where, one for one, this has to be proved to the same level of integrity of a central bank, and this could go in an unpleasant direction.
So, yeah, stablecoin.
But I think if we look at the crypto market, it's growing so fast, and I would say the stablecoin is somehow link between central money and the crypto. Mm-hmm. And in this regard, I would think that we have a quite possibility of that the stablecoin, private stablecoin market will grow, and also because of the regulation, which I again refer to the FATF yesterday paper, each country has to develop the regulation which will make sure that every project which will be launched in stablecoin environment is a very good think over, is regulated, and then we will be in a situation that we have more guarantees, So even private, and it will be not possible to have some dodgy projects because you really need to follow a lot of regulations. And stablecoin
Of course,
itself,
there's an issue with that too, because innovation very rarely occurs with too much red tape surrounding it.
Yeah, and the stable coin itself is considered as virtual assets or as a security, like commodity or any type of equity, but you always will have a classification. So, and you have to follow the regulation then, because as a virtual assets, you have to follow IML regulation at least. As a security, you have always regulation in each country. And I would say one more thing, which is FATF invented, if you are issuer of the stablecoin, you have to have a mechanism to control all the coins you issue and the distribution.
So that sounds a little bit like what USDC is apparently having inside their protocol, right? The off switch, in effect.
Exactly. You need to have technology. Then my answer will be probably it will compete.
They'll compete.
Yes.
Okay.
But it's my opinion.
No, that's totally fair. That's exactly why we're here. So stablecoins are going to coexist in the world with central bank digital currencies. Both of them, there's tons of innovation and research happening in them. Let me ask you this. All of you here seem to have been in the crypto space for some time. Is there room for digital assets meant for payments that are not stablecoins or central bank digital currencies? Or do you think that essentially the advent and the rise of well-regulated stablecoins and CBDCs are going to basically do away with payment coins from crypto? Is there room for a volatile?
Yeah, I think it will survive, maybe within a specific ecosystem or a specific project, the same way that it's used today, right? It's used generally within Ether is used to pay for things on Ethereum. The same applies for other payment tokens, and I think that will continue. No, I don't think there will be a major impact on those, in my view.
Because there are a number of different digital currencies that are intended specifically, developed to become a form of payments, and some of them have perhaps supplies that are volatile or in some way, shape, or form change depending on the usage. You really see complex governance, and of course, then there's algorithmic type stablecoins or collateralized, with decentralized assets, ones like Maker. Are these things dead in the water?
No, I don't think so. I think a lot of these pools can coexist. I think the utility with them is huge. I do think, and being a very strong advocate of the public blockchain myself and Ceba as well, I do think there is a coexistence for a long time. But in the end, central banks and sovereignty tend to call the shots. So I think there's probably quite a bit of weight behind that. But yeah, I'm sure that there will be a long period where the utility within these periods, and I would agree to the extent they can adopt sufficiently rules, regulations, infrastructure so they can be interoperable. I think this hopefully will be actually a very good and fertile ground for many projects that are going on today.
And just maybe, just to add, we have DeFi industry. We have still to link the traditional and crypto-regulated industry with DeFi, and we need mechanisms. So probably it's also will be part of how we will transfer, to peer-to-peer market, which is still not regulated, and I hope we will still have a possibility to have it anonymous, yeah? But how we can move from one market to another, because as soon as you move from DeFi to regulated crypto, you already will be IML and compliance. You can't deal without compliance and regulation here. So I hope it will be a mechanism which will allow us to be efficient between these two markets.
Do you think a lot about DeFi, central banks?
Yes, actually, I think that's the very interesting part that's emerging. And to your question before, I think algorithmic stable coins that are not asset-backed, I think that's the really interesting area now, because the other ones, asset-backed stable coins, especially off-chain asset-backed, are just reinventing banking in a new environment.
Yeah.
But this is really an attempt to reinvent central banking. So that's why I get interested in it. I said this morning, what I would like to see is a stablecoin, an algorithmic stablecoin that tries not to peg to a fiat currency, but basically to stabilize, to peg to the consumer price index, to really do something different and not have the same inflationary risk. You know, I think it's sometimes interesting because people tell me, I don't trust central banks.
That's a great idea. A consumer price index peg stablecoin. That's very cool.
Yeah, because
any VCs want to invest in this? No? Yes? Okay.
Because people tell me I don't trust the banks. You know, you will inflate the money. At the same time, they have tether. So, you know, I mean, it makes sense to trust the Federal Reserve System, but I mean, that's what you basically do. You trust the monetary policy of the Federal Reserve. So that's not entirely consistent. So it would be interesting to see something different.
What do you think about stablecoins backed by something that's not fiat at all? Like, for instance, ones that are either pegged to, perhaps algorithmically, or otherwise collateralized by gold or precious metals. We've certainly seen the rise of some of those before. There's actually a number of different players in the space. Do we see that these are compatible with the virtue? Let's, from a compliance perspective, do you see any issue there?
Yeah, we, for compliance, it's always the same, you know. If there is a regulation, there is a compliance. If there is automatization, we have simplification of everything, and we don't need any more human being. We just need smart contracts and algorithms to follow. And I think at the end of the day, it will be much more transparent and easy from compliance point of view.
Well, we've certainly seen in the past that there are some national currencies that used to be, at the very least, US dollar being one of those, to some extent backed by gold reserves, as an example. So I don't know, from a commercial perspective, is there upside, or is there even demand for these types of things?
Actually, we had quite a few use cases for those types of stable coins that are backed by commodities, in particular in gold. And I think in a utopian world, gold should stay in the ground. I still find this to be somewhat of a nonsense. And I think it's ecologically devastating. However, if you could bring in, thank you. We're actually looking at a case, an interesting one, whereby you could create a stablecoin over gold, which is still at least in the refining process. So it never gets out the door, it never gets melted, it never gets shipped 10 times, it doesn't have to sit in a vault, and it has fantastic ESG standards. That's a case which I like. I think that speaks to the principles that we should all be embracing in terms of DeFi and all of these things. So to your question, yes, I think there are some cases. Other things like diamonds, that's not an investable asset class, but it's one that we kind of all know, and to create a stable coin over something like that is there's interest in that, and then there's various other precious metals that have a similar concept. So yes, I think that to the extent we can reduce a carbon footprint or improve the way that we deal with commodities, this is certainly a very interesting area, and it's more about the investment case. It's not so much about the we don't think about buying a Big Mac in a diamond-backed stablecoin. But maybe Bitcoin we do, and that comes a little bit into the, we talk about dollarization. Is it going to be Bitcoinization?
Well, at the very least, people buy pizza with Bitcoin, right?
Right. Well, yes, that's a good point.
Sure.
Yeah, originally, sometimes an expensive one, but yes, I think there's a place for a lot of these cases.
So, what's next for CBDCs? There's all this experimentation happening all over the world. What do we see as the next step? Are we going to actually see this in the hands of banks who are going to use this for much more efficiency, perhaps in settlements or overnight trades? Where are we going to see the next major either innovation or milestone when it comes to CBDCs?
I would, if I may, I'm not going to say what we're going to see next, but I'm going to say what I would like to see next.
Fair enough.
Which is more collaborations between central banks. And as I shared earlier, Citi is present everywhere. You mentioned that. We connected to like 83 clearing systems today, and so on and so forth. Can you imagine if the 110 central banks that you mentioned earlier on implement their CBDC in a way that is completely different from the others? That means 110 different systems to implement for banks like that are globally present. So that's a challenge. So what I would like to see is even more collaboration, maybe with the supervision or the support of BIS, for example, for establishment of standards, and maybe why not one infrastructure or two, or a limited number of infrastructure. And that's why I'm going to conclude by that we have launched an idea that we're currently discussing with many different banks and central banks called the Regulated Liability Network, where the idea is to have all the regulated entity wanting to leverage the beauty of tokenization and blockchain to actually do it the same way with the same standards on one platform. CBDCs, commercial banks, the JP Morgan coins of these years, and e-money, and when regulated, why not stable coins? The idea there is to enable the full strength of what blockchain can enable and tokenization through one model that everybody can deploy on. And I know it looks like a bit crazy, and but that's what people
One standard for everyone,
yes.
Developed by whom?
By the industry. By the industry, the regulated industry. And not by Citibank, it's not a Citi product. And that's fun. So some people are telling me that that's impossible, it's a pipe dream. Well, that's what people were saying before SWIFT was created. And SWIFT is a reality that connects 60,000 banks or 30,000 banks, I forgot, across the world. That's what people were saying about internet, not possible. So why not? Daring, asking that question, let's have all regulated liabilities on one network.
Well, certainly we've seen that central bankers tend to be, I don't know, adjacent to academics, incredibly curious about the way money works. This is something that I've noticed in my travels around the world. Would you say that there is a collegial respect for other central bankers? Do you see this type of cooperation when you meet with other countries?
No, certainly. I mean, central banks, and Alex has mentioned the central bank coalition that has come together and issued some basically basic needs for CBDC. But when it comes to building, I mean, then it gets difficult. And Alex also mentioned SWIFT. It's not, central banks are not very good at innovation. I mean, we try, but our real prime business is security, stability. And it's usually the private sector that invents and comes with the innovation. SWIFT is exactly an example. They came from the bank, from the commercial banks, not from the central banks. So I wouldn't be surprised to see something similar here. Also, when central banks will issue, you talked about programmable CBDC or programmable money. My guess is that central banks will issue a CBDC that's very basic and leave all the innovation and all the fancy stuff around to the private sector. And I think that's a good model.
Well, I mean, because banks like Ceba, for instance, right? That's what they do, is they create innovative products based on maybe a primitive that's created by a central bank.
Yeah.
Excellent. So we actually have a little bit of time for audience questions, and I'm sure you're burning with them. And I'm seeing some hands raised. Raise them. I'm going to be picking.
I have a question for Moser.
I'm picking. Hold on. You got to hold. You're first.
Go on.
Yes, you're first. So I'm going to repeat your question, so as long as I can hear it.
Okay. It will be a little bit provocative. 2 months ago, I attended a conference where Chief Investment Officer of creditors, and this is true, I was there, said, when asked, would you then invest in cryptocurrencies? And he said, no, because they don't solve any problem. This is what he said. Now, question to you. We heard a lot what the stablecoin might be good for. Now I would like to know what you do answer to him. Is there any real problem when the stablecoin may solve?
So let me repeat that question. I'm going to simplify a little bit. Is there anything that stable coins, by the way, are you also saying that CBDCs, are you bucketing those two things in your question? No? Okay. So stable coins, is there, and anyone can answer, is there any real use for a stable coin?
No problem.
A problem it's solving.
Okay.
Is there a problem it's solving, you're saying? Okay, is there a problem stablecoin solve?
If we
Ekaterina?
consider stablecoin as a crypto assets, vertical assets, because we are considered by the regulator already, I think that we can at least give, what actually Libra tried to develop, like to solve the problem of these big commissions, like when you send money to your parents or you work somewhere.
So remittance fees could go down.
Yes, and I think this is where it's a big market to improve this. It's number one. Second, we remember that in some countries, people and women, usually they don't have even a bank account, so we can help them to be more independent. So I think it's already enough.
That sounds pretty useful.
Yes, I think for
Oh, sorry,
Credit Suisse
like a
guy
real problem
who
is being
has
solved.
an account
fair
in
enough.
Switzerland, maybe in several banks, and his children probably go to school and has already a credit card. Maybe it's a good answer. I don't know.
Okay. Well, all right, who's next? Other hands?
Oh my God.
Yourself right here first.
So let's assume that the central bank could change the monetary policy and interact directly with retail. So how does the commercial banks feel if, for example, that infrastructure that central bank launched for CBDC could enable people to interact peer-to-peer directly without the commercial banks at all?
So I'm going to put this another way. The question was, does a CBDC, a retail CBDC, perhaps disintermediate and make redundant commercial banks if the CBDC is operable P2P? Is that effectively your question? Okay. Commercial bankers, both of you, do you want to have a...
Look, I think the central banks are not credit givers for a start. So if you want credit, number one, as a retail consumer,
That's a pretty useful thing too.
you need
credit.
to have a
Yeah.
bank in between who'll provide the credit. So I think that function is absolutely essential. So I can't really see that disappearing myself.
Anything else?
No,
Alex?
I mean, it's the obvious answers. And I don't think any central banks are seriously looking at disintermediating commercial banks for the reasons you just explained, but also for central bankers are not there to do KYC and AML on every user's using the. It's like that's not their business. And
No.
there might be some countries that decide to do that because they very on the left and they don't trust commercial private banks, maybe. But I don't think it's going to become a reality. Hopefully for commercial banks. In any case, even if it would become a reality, I think banks and private service providers, that you can call them commercial bank, would still have potentially a role in helping the users of those retail CBDCs store those CBDCs safely and provide wallet services to those to those customers
And perhaps
offer
lending?
new service and lending and so on and so forth. So I don't think it's the end of commercial banks.
Okay,
Unless you're in
next
a pure-
question.
I would not have moved from the crypto world to the commercial bank.
We don't have too much
otherwise.
time, so I want to go and get some more questions asked. Gentlemen, yes, you can now ask your question.
To ask, how do you control the money, like the amount of money when you bring out a CBDC? Because then at a certain moment you have sound money and the digital money.
Let me re-ask that question. Is there a way to more or less limit the supply of a CBDC, and how does that fit in with the pre-existing money supply? Is that correct? So actually, we have a central banker here.
I mean, the way, so most central banks changed to regulating or doing monetary policy through interest rates. So basically, the amount of the money is demand driven, but you just apply the interest rates, and that's how you get your monetary policy now. So that wouldn't really be a big problem. And you can also imagine very different methods to inject CBDCs into the economy. I mean, one, for instance, the proposal we made is that it would just be like banknotes, that you would have to go to your commercial bank and basically exchange, withdraw it from your bank account and then get the CBDC like you get a banknote today. And then if you do it like that, it wouldn't really change anything.
So it's be like almost going to a quote-unquote ATM, and instead you're going to actually redeem.
Exactly. Yeah, but I mean, you don't
Yes.
have to physically go there, so that's the difference.
Probably not. Yes, I would think. Excellent. Okay, who else has a question? Up there. Yes.
We have seen, like, especially in the last year, where countries like started to work together in order to create CBDC and set those cross-border payments. This translates to having an alternative to the SWIFT network, right? And the SWIFT network has been also a leverage to sanction countries. So I was wondering if the development of CBDC could have some consequence in the geopolitical.
So the question is, and first is presupposing something that may or may not be true, that SWIFT is the way that central banks, you're saying, communicate and send money to each other.
Banks.
That's the first thing. Was that correct?
They use SWIFT for cross-border
For cross-border payments. Okay.
I can answer this one.
for sanctioning countries or like preventing.
So the question is more or less, will central bank digital currencies, will that allow for sanctions to be upheld?
Yeah, I worked at Swift for 18 years, so I guess I
Oh.
can take that one. Yeah, Swift is primarily used by commercial bank for their wholesale activity, not too much for retail payments, but they do. But and they've evolved their services to be also usable very cheaply for and instantly for remittance. But it's not true that Swift is really used as to. Swift never closed the country. So you could think of that, but they're closing sanctioned banks. So they're preventing sanctioned institutions to use the network. Like anybody, like any banks cannot do business, or any corporates cannot do business with a sanctioned entity.
So it's more like you turned off a specific node.
Yes.
You didn't actually turn off, let's say,
The
a
country.
geographic cluster.
Yeah, the whole country.
Yep.
So that's important to make a difference. But will CBDC has an impact on SWIFT as it exists today? Yes, it will. That's one of the reasons why I left SWIFT, by the way, because I think that if they don't get their act together, they might be disappearing, a bit like Koch in the 80s. So yes, they definitely
Fighting words there.
So there will be an impact on companies like Swift, but also on credit card companies like MasterCard and Visa, and that's why they have a big interest in that technology, because they know that it will have an impact on them.
And they are enabling crypto payments, or at least to purchase crypto with
And
Visa.
in crypto, we have now travel rules, which every country should to implement, and it's also SWIFT for crypto.
In a way.
Where we, in a way, yes, of course, and because it's on top of blockchain, you have to send in a compact message information about the client. When you deal in the regulated area, like we don't talk about DeFi again, but in traditional and regulated crypto, we have now to report each transaction.
No matter where it is and to whom it is.
It's cross-border, yes.
Okay, right there.
Yeah, we don't hear much about the protection of personal freedoms in all these speeches. So is that a consideration that's taken into account and people realize what it implies? And is that just bankers discussing, or are we involving the society and social?
Okay, so that was part a question and part a statement or a declaration of freedom, I guess. But the question basically was, is privacy or personal freedoms or civil liberties in jeopardy due to CBDCs? Who's talking about that? Who's even representing the interests of those who care about personal and civil liberties? Thomas, this is a question for you.
Yeah,
is this something that you think about, that your colleagues think about? And do you get input from groups that aren't just banks?
Oh, all the time. I mean, we get a lot of input through the political process or directly, but I think what I would answer is that that's why it's important to have options and not just one solution. And that's also why I think it's good to have a coexistence between stablecoin and CBDC in the future. You have to have different options not to be captured. And that goes in both directions. I don't think it would be good if all the money is just provided by one commercial entity.
Fair enough. Okay. Yes, yourself.
How can you apply negative interest rates to CBDCs?
Great question. How can you apply negative interest rates to CBDCs? Applicable because we're in Switzerland. Anyone?
Leave that one to
Yeah,
you.
actually, if you look at the working paper we issued, we would be able to do that. The way it's done is that the denomination key would have an expiration date, and you have to exchange it again for a new coin or a new key, and that's when of course you could then apply a fee, and that's how you could apply negative interest rates if you want to do that, which is not a very popular, I assume.
It's a clever technical solution, though. It really is when you think about it. Expiring money that you have to renew, and it might take a little bit off the top when you do that swap.
We didn't highlight it in the paper, and you know why.
I mean, it's clever. Let's give them that. Yourself.
How would government bond issuance work with CBDCs?
Probably better, but we'll ask someone. How would government bond issuance work with CBDCs? Does anyone want to take that?
I mean, one of the experiments we were working on with the Bank of France was exactly this. It was settling, not so much the issuance, but yes. I mean, the way it's designed, I can't go into too much detail, but it was a settlement of a security, a bond, on the public blockchain using Ethereum and a layer 2 security into T2S. So those kind of operations work, and they also provided a certain amount of anonymity, which is important. Again, this was from the central bank perspective, but also for wholesale banks. I think this is something, once the infrastructure is adapted to be able to issue in primary and secondary markets, this is absolutely one of the big I think, changes. I think the legal and the regulatory basis has to converge. That's not, tech is always 100 yards or 100 meters ahead of legal and reg. Yeah.
I am cutting it short, but I'm going to let one more question happen, but it has to be controversial. So put down your hand if it's not a controversial question. Seeing a couple hands go down. Yourself right here.
Will CBDCs be used in DeFi, CDeFi? Will it influence it at any, basically, will it influence it or will it change? Will it ruin the DeFi?
All right, that sounds like the most controversial version of your question. Will CBDCs ruin DeFi? One of the great things that's happened in crypto over the last 2 years. Anyone on the panel, you've got negative seconds to talk about this. So, anybody?
No.
No?
No.
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 No. All right, well, with that, we're done. Thank you so much.